Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is April 28th edition, 2013 of Market Outlook. So we definitely have some very interesting things going on in the world markets. Uh, Not really stable, and there's lots of uncertainty as to what caused this gold drop, as I mentioned in the text version. Interestingly, gold, COMEX stocks, just physical bullion around the world seems to be snapping up. At the same time, prices are dropping. So let's take a look at, I'm going to start off with the daily gold chart here. Here's GLD. And I put in this channel here, and you can see actually the bottom of this channel. What happened here? You had that huge gap down and sort of a climactic sell-off. I mean, we had, I don't know, almost 90 million shares traded one day, and the overall average is 15. So you had, gee, almost 6 times the volume on a daily basis, and that's highly unusual for an ETF. That is the largest volume that I can see pretty much. Well, no, actually, yeah, it's pretty much the highest volume day on record that I can see in recent history. So that certainly suggests a speculative blow off to the downside. And as you know, that we talked about the this consolidation pattern here, and we broke out and did get a nice move up of gee, almost $100 off of that price. But look what's happened here. We basically filled the gap on that big gap lower and had a return move to the trend line. So if we can get above the highs from Friday and back inside this longer term channel, it looks like we'll end up testing this sharply declining 50-day and important resistance. But really, until we get above that recent high before the drop and clear this declining 50-day moving average and this resistance up here, we are still in a downtrend. But that would definitely signal that something highly unusual happened here. While physical demand is still strong, at the same time you got this historic drop, and that is clearly inconsistent. All right, so that's the gold market. You got the confines. Meanwhile, you're still in a bear phase. You had this sell-off. It can still easily come back, test the lows of this pattern before we get another read. But overall, market in a downtrend. Suspect the first key that something that might have been a manipulated flush is a move above Friday's highs and back into this channel. Okay, let's take a look at spiders. Well, on spiders, I'm going to focus on one particular chart here, and that is the monthly chart. So you can see on a monthly basis, let's put in a trend line. You've got this trend line to here. So this is sort of the top of this slightly ascending channel. And you can see that the monthly chart is sitting right at those highs. And also of interest is that you can see the peak to peak. From this peak to this peak to this peak is a good enough time period in between. From the peak to the trowel, peak to the trowel, you got a pretty consistent pattern here. So what we really want to watch is this market running out of gas up here. We'll take a look at the market internals that seem to be okay. But on a longer term basis, we're clearly at the very top of this monthly channel. And we are also overbought on the relative strength indicator. So on a longer term basis, we definitely want to be cognizant of what's playing out there. On the weekly charts, you can see that we are sitting and have tested last week and the last couple of weeks this rising 65-week moving average, but still intact. So clearly a weekly close beneath that 65-week moving average, and this level of congestion up here would be a very cautionary note and probably let us know that a significant correction of this very long in the tooth bull market in U.S. equities is going to be tested. Taking a look at the market internals, you can see we're sort of in the middle of nowhere, so there's plenty of room to move either up or down. The only thing that's showing some sign of deterioration is the fact that the advancing issues versus declining issues, even as the market is testing the new highs, there's significant deterioration. As the market's been making new highs, less participation in the advancing versus declining issues. And in fact, we just got a part of a sell signal. We really like to see the up-down volume get overbought at the same time and turn down, but the volume has sort of been sleepy as well on this rally. So although we don't have a bona fide sell signal because we like to see advanced declines and up-down volume, but overall, I would say the technical picture is on the market internals slightly negative with this indication here. Taking a look at sentiment, sentiment moved back to strongly positive. We're now under the 50-day moving average, under the 200-day, right smack dab in the middle of the Bollinger Bands. So sentiment is definitely complacent and positive, and that is a bullish factor. Now, one of the things we discussed in the text version of Market Outlook was the TLTs, or bonds. And you can see we had sort of broken the longer-term uptrend. I mean, if we go to the weekly chart in bonds, the 65 weekly moving average was breached. We stayed under it, and now we've had several weeks above it. So it looks like where that long-term trend might have been under pressure and attacked and changed. Right now we're back over that 65-week moving average, have done it for a number of weeks, and so we really need to stay above it. It seems to have stalled a little bit here, but rates are really, really low relative to where the market is. So a couple things can happen. Let's move back to this daily chart. The daily chart right here, you can see the 200-day moving average right around that 122 level. A failure of that 122 level to me would be a relatively positive sign. You definitely want the market weaned off of lower rates to continue its rise. If we can get under that 200-day moving average, that would indicate that possibly the long-term trend in rates has stopped, and the continued priming of the pump put on pause at least, and that is going to be an interesting indication. But meanwhile, as we sit above the 200-day moving average, and if we clear the recent highs over the last week or two, that would probably indicate a potential test of the all-time highs as well. And that would definitely indicate more liquidity coming into the markets and finding its way into treasuries. So something to be cognizant of. We already covered gold. Now, another thing I wanted to cover is currency movements. One of the things that's really interesting is the Chinese currency. It's sort of a hybrid, semi-controlled by the government, but we don't have a lot of history on it, but the history that we do have shows that we've been sort of going in this sideways consolidation. And if you take a look at this, you can see that we're at the all-time highs since this has been trading. So one of the interesting plays you may want to consider is watching this play out to the long side and a reevaluation or an upward movement in the Chinese currency. So looking at the the weekly charts, very similar picture, sort of sideways action, but you're at the cusp of a potential move which would take into account years of consolidation and trying to maintain this currency at a relatively low exchange rate to enable great exports for the Chinese government. Now, one thing to consider, of course, is that we are a bit overbought. At the same time, we're sort of at the highs. But again, this is very, very short-term RSI on the dailies, only taking into account a couple of days. So yes, we can have a short-term correction here, but the bigger picture looks like the Chinese currency is about to make a big historic move. Now, another interesting case in point is looking at the Chinese currency versus the Japanese currency. And here is a chart of the Chinese currency up on top here. You can see that sort of coincides with an all-time closing high, while the Japanese yen really just making a significant move to the downside and barely holding on to its recent lows. Had a small rally on Friday, and more importantly, look at the ratio chart here. So this is a ratio chart, and you can see that on a relative basis, a spread ratio chart of the Chinese currency to the Japanese currency, we are at the historic levels. And that indicates to me, which would be consistent with the overall prognosis, that Japan is in deep trouble. Its debt load is enormous. It's actually probably insolvent. And obviously the Chinese are still growing, and the currency is at a dramatically different level at historic highs. Long term, I think that this trade is a home run type trade, not to be traded in and out on a daily basis. But if you're a position trader, taking a look at historic changes in these relationships, look like this is pretty much inevitable. So let's keep an eye on that relationship as well. Anyway, so it sort of sizes up the overall global economic environment as well as some key charts. Hope this helps. See you next week. Don't forget to sign up for this commentary and video newsletter, and you should get it pretty much every week. Thanks, and bye for now.